Hello everyone, I'm Chris Scalisi here with Spencer Israel, and we are fast approaching on yet another earnings season.
It's here.
Oh boy.
It's here.
Yes.
Yeah, it seems like last quarter's just ended, but yet here we are.
I think that's how it always is, especially when
Right.
you're working at a financial media company.
That is true. That is true.
Yes.
So we thought, seeing as how this Friday, really tomorrow, is kind of the big first day of earnings season. We got a lot of the big banks, Citi, J.P. Morgan, Bank of America, all reporting on the 14th. We thought we'd sort of do an overarching macro level preview of what the market is expecting for this earnings season. So looking back.
Yeah, before that, let's
Yeah.
take a look at last earnings season, sort of what the trends were, because it was a little surprising.
Yeah. So there's a lot of different data sources out there. There's Bloomberg, there's Reuters, there's FactSet. They all differ a little bit, but they all generally say the same thing. And the general consensus was that last quarter earnings were driven by banks and tech. And if you've been following the market at all this year, you know that those have been the drivers for the first 6 months of the year. According to FactSet data, the S&P 500 had 14% year-over-year earnings growth last quarter. That's compared to a 9% estimate. So they beat the earnings growth estimate by 5% last quarter, driven again, like I said, by the banks and tech stocks.
Yeah. And it's kind of interesting because those are sort of the sectors that have had sort of like not a rocky path, but some like hiccups. Because last month there was the downturn in tech after that commentary
Right.
from I think
It was
Goldman Sachs.
right.
Yeah, and then the banks have been sort of on and off based on the Federal Reserve's pace of rates.
Yep.
Are there any other sort of interesting sectors that people have their eye on, or?
Well, so for this quarter, it's really going to be energy. Energy's a big one.
Yeah.
Oil prices are rising, so the market is expecting energy to sort of lead the charge in earnings season. This is again according to FactSet data. The energy sector is expected to grow year-over-year earnings growth by 387% this quarter. That's again driven mostly by the underlying price of oil, which kind of drives the whole sector. We know that last year oil was very cheap. So energy is supposed to be the main driver. Aside from that, we're looking at IT, which is expected to grow about 10% year over year. Everything else is mostly single-digit growth, which is again still positive.
Yeah.
The only sectors that will maybe have a little bit of a question marks around are healthcare and utilities, which are expected to be pretty flat year over year, and consumer discretionary, which is expected to be down 2.2% this quarter compared to the same quarter last year.
Okay. All right. Well, that was sort of the preview rundown for this year, this season.
Yeah.
So if you want to get the moment-to-moment updates, be sure to check it all out on your Benzinga Pro news feed. And if you'd like more updates like this, stop by our YouTube channel frequently and hit that subscribe button. Be sure to sign up for alerts. And yes, thanks for watching. I'm Chris Scalisi, Spencer Israel.